Hello, I'm Gemma Jackson from the Association of Investment Companies. Earlier today I was joined by Graeme Gunn, partner at SL Capital Partners, managers of Standard Life European Private Equity.
Sure, the Standard Life European Private Equity Trust is a 470 million net asset vehicle that invests in European private equity. It invests via a fund-of-fund approach where we're trying to build a portfolio of the leading European private equity funds. We try and do that on very much a conviction basis where we're looking to build a core relationship with a small number of high-performance private equity fund managers over the long term to drive capital growth for our shareholders. As I mentioned earlier, we use a fund-of-fund approach. So what we are seeking to do is trying to find a select group of leading European private equity funds. And what that really means is that we end up with a portfolio of underlying companies of about 300. And these are diversified across sector, geography, stage of investment. But key, I would certainly say, is that we're looking to back funds that invest in businesses with a market cap of between 100 million euros and 2 billion. These transactions are very much leveraged buyout transactions, so the private equity funds that we back will own and be able to strategically change those businesses and drive strong profit growth and value growth on those companies over the typical private equity investment period, which is 3 to 5 years. What we're really looking for when we're doing our diligence on these managers is to try and find what we call operational alpha, this private equity additional return that the managers can bring to bear on those underlying businesses. And this takes many forms. It can be strategically repositioning the companies. It can be M&A. It can be acquiring other businesses. It can be changing management, augmenting the strategy, and then really trying to drive that over the long term. So really, as I say, what we're trying to make sure is that we're selecting those managers that can provide this additional return, this return that you can't really find anywhere else in the listed markets today, combined with SL Capital's long-term presence in the market, so we can get access to those managers and provide that to our shareholders over the long term. Well, firstly, I think that the direct investment approach from a number of trusts is an attractive way to get an exposure to private equity. What we're offering in the fund of funds methodology is really to build a kind of what we regard as a kind of initial access point to the asset class for individual shareholders. So it's a very straightforward model. It's we back the private equity funds that we have known for a long time. We do that under a couple of strategies. So we invest on a primary basis when they are fundraising themselves, but we also acquire private equity interests in the secondary market. So we're able to match opportunity and exposures to what's happening in the markets today. In terms of diversification, as I mentioned earlier, we have around 330 underlying companies in our portfolio. We think that's enough diversification. It provides that if a few of those companies don't perform as expected, that the overall returns that we can drive to our shareholders will be consistent over the medium to long term. Well, at SL Capital, we track around 1,500 private equity funds across Europe, and we are closely monitoring about 800 of those day to day to see who is the best performing groups out there. So, we're taking in a very large number of funds into our diligence process and selecting a very small number of the best performing managers to deliver the growth that we expect from our portfolio. In terms of specifics, I would say we are interested in looking at markets such as France, where we see a strong group of managers based there, some great companies, but a poor GDP performance. So we think there's great opportunity and good value in that market. We're trying to focus on increasing our exposure to high growth areas such as the Swedish market, the Nordics in general, which we think are very strong and will be over the longer term. Private equity generally is a little bit light in Germany, so we are focused on the German market and also into the Benelux market. But I think specifically today, we have amassed fairly large cash balances from the disposals that we've had in our mature portfolio over the last 24 months. So we're focusing very much on the secondary market to redeploy that capital into high-performing assets that we will see will derive strong returns over the short to medium term, actually. Well, I think today, certainly when we look at the net asset value performance of the trust, we've seen great growth over the last 3 to 5 years and certainly over the longer term since the financial crisis. So I think we're at a bit of an inflection point today where we're seeing robust NAV performance from the sector as a whole, and the majority of the trusts are doing well, whereas the share prices are certainly looking like they're dislocated from the net asset value today. So again, I think there's two opportunities today for shareholders. One, to buy into the sector at a relatively strong discount and also benefit from that true net asset value growth driven from the underlying profit growth in the companies over the longer term.
The private equity sector offers a really useful way to gain exposure to unquoted companies and offers genuine hands-on active management. It's had some ups and downs over the years, but it's also produced some really strong long-term returns. It's a very useful way to gain diversified exposure for long-term investors. Thank you very much indeed for watching.